It's Matt Santicapita from the Santa Sells Houses team, and this is another episode of our Monday Market Update. This one's going to be a little longer. If you saw us last week, we kind of explained we're going to be digging through a bunch of numbers from 2020. I'm also going to be giving you a little bit of input on why we are where we are and where I think we're going for 2021 on things. So let's jump into the start of it. New listings this past week came in at 112, solds at 96, conditionals at 15. All I'm going to say there is, again, I was hoping we would see a little bit more. Not necessarily on solds and conditionals, but I was hoping we would see more listings come to market. What we need to do is go over our 2020 numbers, and in there, I'm going to just jump to it and I'm going to say December 2020 has really set us up for a funky Q1 and an interesting rest of 2021. So let's summarize. We're going to go through December, we're going to look through then 2020, and then we're going to dig into some other info. So December stats only, and this is for L-Star, so London St. Thomas. Sales activity, we saw sales activity increase 36% from 2019. New listing activity went up 19.7. Active listings decreased 57%. And months worth of inventory went from we're at 0.7 12 months ago. We were at 1.5, which is a 68% decrease. That's problematic. What that means, and let's just define something here, is that months worth of inventory when we're talking has to do with if not a single other listing came to market, in what time frame would there be nothing left to buy? Other numbers that we're going to be talking about in this, we're going to be talking about the average home price and the median home price. Average home price is generally used a lot more, which is you take all the numbers, so let's say the dollar amount of every sale, and then you divide it by X amount of inputs, and then that gives you your average. Where median goes is you take the direct middle of all of your numbers. Median generally gives you probably the best measurement of what we should be looking when we talk at numbers. However, median prices aren't used as often, so everybody defaults to understanding average. So anyways, let's move on. So December London only, because we always talk London only in our Monday Market Updates. December of last year, sales were at 401. Now, why is this interesting? Is because the average for the previous 4 years was 303. That represents an increase of 32%, which is huge because, let's be honest, half of December is a ghost town. The vast majority of people are staying at home, decorating a tree, opening presents, not really buying homes. So that's a very jarring anomaly in the market. In 2020, year to date, so January to December, guys, 9,976 homes traded hands. That's an increase of only 4.9%. Now, why we have to say it in those terms is this is the data that is only from properties that have been listed through the MLS. So if you went and you bought a new build home and that property was not listed on realtor.ca, it is not counted in these numbers because we don't have the ability of tracking it. Now, in probably about a month or so, maybe a little longer, CMHC will have some reports that'll be coming out, and we'll be able to actually revisit this, and we'll do another video at that time, but just understand these are numbers from our MLS system. So new listings came in at 12,201, which is actually 2,225 fewer than 2019, or an 18% drop, and sales to new listing ratio is 81.9. So that means 81.2% of homes that are listed sell, and the other 19.8 or 18.8 don't sell. Active listings. So 2020 month average number of listings for sale ended the year at 1,118. So that means the average month of last year, there was 1,118 homes for sale in London and St. Thomas. The 10-year average comes out at 2,202. Now, when we look further into it, what we started to see is actually some interesting anomalies. 2017 seems to have been the real lead up to what we're getting into as far as the real pickle of a real estate market. So from 2011 to 2015, the average was just shy of 3,000 homes listed. 2016 dropped to 2,000, but then from 2017 to 2020, it was actually 1,262. So we've been in this funk for about 4 years. And really what's triggered this great tidal wave of interest in homes, or the cause and effect of why we have very little inventory, prices are going up, all of that. We have the pandemic, which you're seeing people moving from larger centers to smaller centers. We have mortgage rates, as an example. In last week's video, you can go and see it. A year ago, a 5-year fixed rate was a little over 3%. Right now, they're hovering at, call it around 1.7, 1.75, somewhere in that range. So borrowing money is drastically cheaper. But the other driver, and this actually also layers into the pandemic situation, is the work from home scenario. So there's a lot more people, especially a younger demographic, who work in the tech sector or have a more techie style job where they can work from home for the foreseeable future. And so that is changing the types of homes that we have. For instance, having a home office is a much more common request today than it was 2 years ago. The other factor there, call it to like layer in a fourth, which we have been talking about over the past couple of years, is the natural aging of the population in Canada. So the baby boomers are retiring out of the big cities like the whole Toronto region, and they're coming to areas like London, which has great hospitals, and nightlife, and hopefully we get back to that soon. So then to get back into this, months of inventory, December 2020, we saw 1.3 months worth of inventory. The 10-year average is 3.13. That's a 60-ish% drop. But what's interesting is, again, 2011 to 2015 was an average of 4.5. 2016, it went to 2.5. And from 2017 to 2020, 1.5 months. I keep bringing up 2017 because there was an interesting phenomenon that occurred there, and it was in the new construction segment. 2017 was when the cost to build new homes went up drastically. We saw trade shortages, we saw supply of materials start to go up. And that's what's kind of led to a bit of the funk that we're in. Now, as we mentioned last week as well, we're going to dig into types of housing to get a little bit more nitty gritty for everybody here. So this one's going to go fast, so stay with me. So apartments, and this data is for London and St. Thomas. Okay, so the average price was up 14.5% for an apartment, and the median price was up 15.2%. Now, what's caused that is that active listings, as an example, in 2020 for apartments was 68 on average in a month. We should be, for a balanced market, having a number of around 200. So again, there's so much of the market is gone. And months worth of inventory, we sat at 1 month's worth of inventory, when in a balanced market, we should have anywhere from 4 to 6 months worth of inventory. Now, townhouses, even more intense. Average price of a townhouse is up 17.2, median is up 17.9. And again, the same drivers, guys, are causing these. But surprising that the townhouse number, inventory and active listing levels is so low, to be honest. We had an average of 85 townhouse listings on market every month in 2020. And again, when you look at a balanced market, which is what everybody should want, it's generally about 300. Now, months worth of inventory for the year for townhouses, we sat at 0.8. So remember, that is 3 weeks inventory, meaning in 2020, in the average month, if not another townhouse listing came on the market, everything would be sold in 3 weeks, and you wouldn't have anything to buy that's a townhouse. Wild numbers. Now, single family, which clearly is the biggest chunk of the market, so that's a detached family home. Average price for December, these are two numbers that I want to talk about. For December alone, so December 2020 to December 19, the average home price is up 32.9%. The median home price is up 29.7%. The average for the year was up 20.2 and the median was up 21. So December was nuts. And that's what's leading us into the setup of why Q1 is going to be crazy, or really, I guess, why it already is crazy. We do not have enough inventory, and the dwindling inventory didn't just occur last year. It's been going on for 4 years. And we've never had a scenario where we've been able to play catch up, where demand has softened a little bit. Now, the pandemic has actually, call it stoked the fire. Someone threw a couch on the bonfire and things are getting crazy, because if you don't have to move, you're not moving. You maybe want to move because you realize you need something slightly different, but the sense of urgency really isn't there. It's more of a want versus a need. So that chunk of the market in an already strong seller's market being removed has now led us into, truthfully, the most intense seller's market that we've ever seen. The fact of the matter is, we do not have inventory right now. Now, looking at what we've seen here in 2020 and what I think is going to happen in 2021, let's make a few assumptions. Let's just say lockdowns that we're in right now continue for the foreseeable future, being the first quarter. That's going to cause inventory to stay low. Mortgage rates are going to stay low. They could technically go a smidgen lower, but I do believe at the end of the day, buyers are still going to buy. So we're going to sit in this type of market that we're in right now, which is a bit of a frenzy. I think prices are going to keep going up. However, I think come the end of Q1, start of Q2, the economy is going to open back up. People are going to be comfortable. Let's make an assumption. The economy opens back up. Vaccines are all being given to people. The world gets back to some level of normal. We will probably see a slight price pullback. Now, I'm not saying a massive correction, a slight pullback. Single-digit percentages is what I'm talking about, nothing drastic. And it'll start to even off, and we shouldn't see mid-year the same type of price appreciation. Now, that's if all certain things happen, right? That's how I see things happening. Maybe I'm wrong. Who knows? But let's just assume that come spring, like real spring, April, May, we're through this and we can all go about a little bit more normal life. I think we do see a stable market. However, prices are not going to come down in 2021. It's physically impossible. The demand is too high. The only thing that I could see that is going to cause pricing to change, and this is when you see interest rates fluctuate and they have to go up, and we're not talking 25, 50 basis points. They have to go up, a couple hundred basis points to see a jarring in the market there. And with that being said, we're still going to see the demand out of Toronto. So in a place like London, guys, I think the prices that we see here now, call it the new norm. And that's just it. Housing prices in London have been cheap for a long time. We were a well-hidden secret from Ontario, I guess, maybe. And now they're here to stay. So we went over tons of numbers. If anybody wants them, obviously you saw me, I was reading most of them. There's a whole bunch of paperwork here. If anybody wants copies of these, just shoot us a direct message. Shoot our team a direct message and we'll get them to you, because if you're like me, you kind of like seeing it written down. And again, if you want more clarity to what's going on, maybe in your neighborhood as an example, please reach out to us. We're here to help. We're your source of real estate information. So again, it's Matt Santacapita from the Santa Sells Houses team, and this has been a very long Monday Market Update.